The US dollar strengthened sharply overnight as the Federal Open Market Committee minutes showed that most policymakers saw quantitative easing ending in 2013. The minutes noted that a few members expressed the view that ongoing asset purchases would likely be warranted until about the end of 2013. Meanwhile, several others thought that it would probably be appropriate to slow or stop purchases well before the end of 2013. Citing concerns about financial stability or the size of the balance sheet. Nonetheless, the announcement of additional easing back in December was justified as, without further policy accommodation, economic growth might not be strong enough to generate sustained improvements in labor market conditions. The development in major dollar pairs are starting to argue that the post-fiscal cliff sell-off in the dollar was just a knee-jerk reaction. Euro-US dollar is heading back towards the 1.3 psychological level. Indeed, British pound US dollar's break of the 1.6066 support indicates that an earlier break of 1.63 was a bull trap. Though, the weakness in the Japanese yen remains clear for the moment. Focus today will turn to employment data from the U.S. The non-farm payroll is expected to show 145,000 growth in the job market in December, while the unemployment rate is expected to be unchanged at 7.7%. Yesterday's strong ADP report, with a 215,000 private job gain in December versus expectation of 138,000, raised hope of an upside surprise in today's NFP. The employment component of ISM manufacturing also staged a strong rebound back to 52.7 in December, up from 48.4 in November, and was even higher than October's 52.1. The 4-week moving average of initial jobless claims dropped to 360,000 on December 29. Down from November 24th's 406,000. However, Conference Board consumer confidence dropped to a 4-month low of 65.1. Overall, the leading indicators are supportive to a solid NFP figure today. The US dollar should be firm against other major currencies in case of an upside surprise in the NFP. But we'd prefer US dollar Japanese yen rather than other major pairs considering uncertainties in the impact of risk appetite. Also, a number of market-moving indicators would be released today. UK PMI services is expected to drop slightly to 50.1 in December but stays above 50 level. The data would trigger some volatility in EUR/GBP cross. Canada will also release employment